myself Vaibhav. In today's session of automated trading, we are continuing to work with the fractals along with the min-max, ATR and EMA indicators. This is the fourth part of this ongoing series on which we started working on Monday, and hopefully today or maybe tomorrow we will be finishing off this setup. This is the technical description here. I hope you are well familiar by now. Min-max, ATR, and comes the EMA. Before we get started, this is a standard disclaimer. Here I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs for many months and maybe even years, and also allow it to run on the demo account for a good enough time to get an idea of the algorithm's functionality. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. On that note, we get started for the day. Yesterday we have finished the buy side for our setup. So today, we will be mainly focused on the sell side, and as I have said earlier as well, we want the sell trade to happen when these 10 and 20 EMA on the daily time frame is in bearish zone, that is the 10 EMA is less than the 20 EMA, and also the last 30 hours maximum value is above this 10 EMA. At the same time, the last 30 hours value should be less than this 20 EMA. So it will mean that only during this buffer zone, when the price is in between this desired zone, the trading will happen. Suppose if it continues to rise and crosses above this zone, then no trade will happen. And when again if changes its course and starts to fall and comes in this desired zone, then the trading will resume. So that is the setup for our system. And on the hourly chart, we focus on these maxima values, and now that crossover has turned into a bullish zone, we will need to look for the earlier instances when the trading might have happened. So here I will give you some examples. We want the maxima to be rising, but it should be less than the 20 EMA, so trading is not going to happen here. I think at this point in time, here the maxima is less than the 20 EMA of the daily time frame. At the same time, the maxima is above the 10 EMA, and also the maxima value is greater than the maxima value 29 hours back. So that condition stands fulfilled. Then we don't want the trading to happen when the values are still rising, when the momentum is still strong. Rather than that, we look for next fractal and we place the order closest to the fractal values maximum, and then we will be going for a pending open or the market open depending on the last hour's candle closing. Also, we need the last candle to have closed with losses, that is its closing price should be less than the opening price. The fractal is defined for 3 hours, that is 3 hours of lower highs on the both sides, and then we will consider the condition as fulfilled. So we go back now on our platform where we have finished most of the works regarding bringing in the indicator blocks, and also we are done with the buy side. So today is the time to start working on the sell side. Here this is a standard instrument subscription. We are working with the Euro USD. The position amount has been defined at 0. This is the fractal indicator with hourly setup. Shift is 3. Number of bars on each side is also 3. Then the min max hourly setup, shift 1 and shift 0 and shift 6 to take the values, current value and the value 6 hours back respectively. Then we got this ATR on the daily time frame for optimizing purpose. The min max again for hourly time frame with shift 29, that is the data 29 hours back. Then we did this calculation to define the 5% of the ATR, which is our marker for getting involved, getting entry into the trade. We got these EMA blocks for determining the crossover, whether it is bullish or bearish. Then we got the historical candle to check on the price action during last hour. We did this calculation, the difference between the last hour's candle close and the minimum value for the buy. Now today we will need to do similar calculation again, where we will be deducting the candle closing from the maximum value, as we are looking for a sell trade. There is the stop loss calculation. Here this is the target price. We got this buy execution price, the order validity, and then this candles of 10 seconds each for getting a precise entry point. And then we got this buy side done in yesterday's session. So here we have defined all the necessary conditions, and then we went for two types of orders. One is open at market, one is pending open, depending on where the last hour's candle has closed. And if it is within the price band, then we will go for a market open. If it is beyond the price band, then we will go for a pending open, where the price is just little above the minimum value, 5% of the ATR, and that is being done to make sure that we are actually buying closest to the minimum value of the bearish fractal. Now we need to bring in fresh conditions. First thing first, we will need to check for the bearish crossover, and for that we need the EMA 10's value to be less than EMA 20's value. And so here we start working with that. Let us take EMA 29 and EMA 30. So EMA 29 is 10 days exponential moving average, and EMA 30 is 20 days exponential moving average. So it should be less. Then we want the maxima to be rising. So we go back to the maximum values. So here we need the maximum of ask high price. Okay, we got it. And we need to take the current maximum value, max 17, and we need to compare it to the maximum value 29 hours back. So we are sure that the maxima is rising. That means correction is there, and it should be ask and high price. Okay, so we got this maxima 28. Maximum 17 should be higher than the maximum 28, and we bring in one more if condition. It should be greater. Now, along with the correction, we also need consolidation. That means the current maxima should be equal to the maximum 6 hours back. That means the upward momentum is subsiding now, and the price is rather stabilizing on the higher side. So that will serve our purpose. So again we take maximum 17 and maximum 18. Now maximum 17 should be equal to the maximum 18. Yesterday we had done this maximum 16 condition as well. Here we need to define it to make sure that the maximum 16 is less than the current maximum value, and so we take maximum 16 and it should be less than the maximum 17. So here we have defined maximum 17 should be equal to the maximum 18. So far so good. Now we need to look at the candle 31's closing levels. So here we can now join these blocks and the flow. Okay, and it should be symmetrical, so most of the conditions which we have defined for the buy side, the inverse of that should be true for the sell side. So again we restart our if conditions setup, and as I said, maximum 16 should be less than the maximum 17. And now hourly candle data, which needs to show that last hour has closed with losses. So we need to take a look at the candle 31's closing and opening level, and the candle 31 should be among the auto created variable. Yes, it is, and its closing should be less than its open. That means it has closed with losses. Now we need to define for the EMA and the min-max setup. We need the maximum of last 30 hours to be about 10 EMA of the daily time frame. At the same time, it should be less than the 20 EMA of the daily time frame, and this candle close should be less than the candle open. Candle 31's closing is less than the candle 31's open price. Now let us first take these blocks to where they belong. Okay. Now the maximum value, current maximum value, that is maximum 17, should be above 10 EMA. So we take the EMA value, and that is EMA 29, and again we take the next EMA, next E block, and maxima should be greater than the 10 EMA, and maxima 17 should be less than 20 EMA. So we need to take this minima EMA's condition, EMA's value, and compare it with maxima 17. This time we need the maxima to be less than the EMA 30. So we straight away get one more A block. It should be less than the second input. Maxima 17 is less than the EMA 30. So most of the conditions have been defined. Now we need to do some precise calculation to get the entry point, and then we need to do calculation for determining the difference between the last hour's candle close and the maxima of the fractal. So now we need to turn our attention to a bit of mathematics, and mathematics will greatly help us in making sure that we are not going for a trade which is not optimally priced. So here I will explain to you on the chart as well. So here this maxima has been formed, and now we want the execution price to be just a little less than this maximum, maybe 5% of the daily ATR. And for that we need to see if the last hour's candle close is within that price band or not. Suppose if it is within that price band, then we will go for a market open sell trade with 15% of the ATR, and if it is outside of the price band, then we will place the order at the 5% of the ATR from these maximum values. So we will deduct that, and for that we need to do calculations here. We bring in calculation expression. We need to do two different calculations, one for the buy execution price and one for determining the difference so here we need to look at the maximum value, that is maximum 16, and then we need to deduct the last our candle close, that is candle 31's closing level. So we need to now make sure maximum A1 minus A2 A1 minus A2, and the result will be the fractal difference 1 or fractal difference 2. Okay, and we will be comparing whether this difference is less than or greater than the 5% of the daily ATR. We join the flow here, and again, result of the calculation, we now need to define the sale execution price, and sale execution price will be the maximum 16 minus 5% of the ATR, which is AP, as we had defined ATR PD yesterday as 0.05, and line 21 is the daily ATR. So now we need the calculation here, the maximum 16 less 5% of the ATR, that is AP, so here we now need to do A1 minus A2, and this will be SCP, sale execution price. So here we join this to now we have defined the entry point for sale trade. Now what we need to do is bring in the one last requirement, whether the price is starting to fall from the 5% of the ATR range, and for that we need to do some calculation. Now calculation we have already done. We now need to define the candle 31's closing level, and then the dynamics of 10 seconds candle. Whenever the price starts to fall below the candle 31, the trigger will happen depending on the prevalent situation. So we go back in time and we look at the candle 51's closing level, and it should have been higher than the candle 31. Candle 51's closing level should have been candle 31's closing level. and candle 51 should have been higher than the candle 31, and then during the last 10 seconds the price starts to fall below the last hour's closing value. So we again need one more if block. We now take this. Candle 51's closing was higher than the candle 31's close, and here also you need to do the check on the candle 50, and this time candle 50 close should be less than the candle 31's close, which is hourly candle, means the price is starting to fall. Then we check whether the candle closing is within the defined price band or not. If it is within the 5% of the daily ATR, then the market open will happen. Otherwise, the pending open with sell execution price. We line this all the blocks somewhere here. If candle 50 closing level should have been less than the candle 31's close, and now comes the requirement to see the difference, and that is the difference between the fractal maximum and the hourly candle close. So this will be FD1, and it should be less than the 5% of the ATR for the market open order to happen. So we take this, and now we need to bring in the pending open and the open at market order. One side will be connected. So here comes this requirement. By suppose if the fractal difference between the maximum and last hour's close is less than the AP, that is 5% of the ATR, then the market open will happen. Otherwise, if it is greater, then the pending open will happen. So here we take default value of 0.1 million. Slippage remains at 2 pips. Stop loss, we have defined it yesterday only. So similar thing also here, we need to remove these stop losses. Okay, trade amount is to be set at 0.1 million. Slippage 2 pips is fine. Now let us go looking for a so here the target price, the stop loss, the entry point has been defined, and we just need to take this calculation done already, and this will be the take profit for both of these calculation. Now we need to take the stop loss value. So here comes the stop loss. So we are almost done with the market open of the order. Now we need to put in the good order validity time, which is OVT, and the sell execution price. We are looking for a sell trade, so make it sell limit. Here also we are actually looking for a sell trade. Make a change, and the price has been defined at the 5% of the ATR, and that is the maximum plus the 5% of the sorry, the maximum minus 5% of the ATR. So here there is a calculation for determining the sale execution price. So we got this. Okay, so far so good. It looks like we have done with most of the requirements, and now we can test this algorithm for how it is working. Maybe we will test it for a day or two if it is running fast enough. Oh. So we got this open at market block, and now this is good. No need to change it. Open at market and the pending open. So far so good. We have almost finished this setup. Now is the time to test it, whether it is working as we desired or not. So we draft. Then we export the file to the Visual JForest platform. So here we will save this file as part of May 2020's efforts, and we import the same file here. So now, open, and this is our file. We need to compile it first. Okay, local run, compile it. Strategy compilation successful. That means we can test it. We will test it for previous week. Instrument is good, and we are going to follow the uncontrolled financial market environment. 10 and 1. It is testing now. It is functioning good enough. Actually, the code is acceptable to the compiler. That means we haven't made any mistake while writing the code, while getting the flows right. But as you can see, the test run is pretty slow, and I don't really think we will be able to test it for a long enough time. So rather than doing the test here only, we will I will leave this testing to be done by you for, as I said, while starting the session itself, that we need to do the extensive testing. So I'm leaving this to you. I would recommend that you do extensive trial testing once you are done with the setup, and that will give you a fair amount of idea whether it is going to work or not. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. See you tomorrow. Have an excellent day ahead. Goodbye.